Hey there, everybody. Thomas Will with Basecamp Trading. It is Tuesday, June 26th, and we're going to take a look really quick here at crude oil and one of the setups from earlier today in the trading room that played out very nicely, and that was a long setup. Now, first thing you need to understand is this is taken within the context of our bias. So our bias in crude oil is bullish, and the reason we have a bullish bias is the trend is up on the 240s. We are higher highs, higher lows, and we had pulled back into undervalued, so lower yellow price bar segments here, saying that we've now gotten extended to the downside against the upward moving trend. Okay, so that means we're looking for long entries. Now, what ended up happening, we sold off really quickly here. First, we jumped in the morning, we sold off really quickly, and then turned right back around and immediately reversed back up, and we closed in just a textbook hammer here. Now, the other thing I want you to notice is look at the momentum on the 30-minute price chart. So we had strengthening momentum, and this ended up coming down, and when it came down, it still couldn't even change histograms back to red. So there showed a lack of unwillingness of sellers, or an unwillingness for this market to continue to sell off. Then it broke the high of that hammer, which triggered not only the hammer, but also triggered a bullish inflection on the histogram. So an inflection takes place when our histograms go up, back down, and then start to head higher again without changing colors. This kind of little hill here you see in the green histograms on the MQ momentum. So it triggered a bullish inflection and a hammer, all within the context of our bullish bias. Crude then proceeds to jump straight up and run right up through the resistance from the 69.44 highs and continue to climb about another point more. And we've kind of stalled out now over the past hour or so, up around 70.17. Now, one thing that's kind of interesting that you can look at is if you go to your Renko charts, and you can use, this is just using a mean Renko. Renko does a really good job of kind of getting rid of a lot of the noise. So once this thing starts climbing, you just trail your stop behind each one of these higher pivots, and then you stay in for the majority of the move until we start to have this bigger retracement. Then you go ahead and get out. And that's coming down off of a bearish divergence as well. So you can always switch it up and use a different chart pattern or different chart to keep you in the market and help get rid of that noise. And a mean Renko is a really good chart for doing that. All right, but that's it for today. I hope it helps. I will see you in the trading room bright and early tomorrow morning. And until next time, everybody, happy trading.